You're listening to the Good Food CFO podcast, where we focus on financial strategies for building a profitable food business. I'm your host, Sarah Delavan. On today's episode, we're shining a light on the fact that many food business owners are working with financial reports that don't serve them. We're talking about why that matters and 3 signs that will help you identify if your financial reports are in need of a revamp. We'll also talk about the steps you can take to improve them. Hey guys, I'm super excited for this episode because when I talk about this topic, I typically hear back from a lot of food business owners telling me how helpful it was and how it was an easy first step for them to get more involved with their financials and gets them feeling like they want to start learning more. And if you know anything about me or you've listened to the previous episodes, you know that I love when business owners get excited about their numbers. I'm hoping that some of you leave with some excitement and ready to get in touch with your financial reports by the end of this episode. Some of you listening might look at your profit and loss statements and feel like you don't learn anything from them, right? I talk to some people who, look at their P&L, also known as your income statement, depending on the accounting software that you use. And you think, okay, well, I know that's my revenue number and I know that's my profit or my loss number, but all this stuff in between is not really providing me with any value. I'm not really learning anything from it, right? That's not uncommon. Others feel like their eyes just kind of glaze over and feel bad about the fact that they think that they don't know how to interpret the data on the financial report. So the problem is them. I want to assure you that it's not you. The problem is your financial reports. In fact, most business owners that I meet check in with their P&L statements on a somewhat regular basis. They just aren't sure what to do with the information. And that's because their reports are not designed for them and they're not designed for their business. They're working with what I describe as basic financial reports. And this matters because without financial reports that are designed for your business and designed to serve you as the business owner of your business, it's like trying to win a race, a foot race, with your shoelaces tied together. Honestly, right? Eventually, you'll get to the finish line, but it's going to take a lot more effort and it's going to take more time. You really want to do a good job. You want to do your best and you're giving it your all. But if you don't have access to everything you need to be successful, your work becomes harder. Financial reports are very valuable to you, especially if you look at them on a monthly basis and if they provide you with true, valuable information. When they do, right? When your reports are designed to serve you and your business, it means that they help you see how your business is performing. That means you can see what's working well and what's not, and where to focus your attention. They also help you identify the right goals for your business and then allow you to monitor your progress as you try to achieve those goals. I call financial reports business gold because, like I said, when you have valuable information in your reports and you check in with them monthly, you have nearly everything you need to make fully informed decisions to build a financially sustainable and profitable food business. When you don't have financial reports that are designed for you, it leads to best guesses, right? It leads to following your gut. It leads to emotional decisions rather than fact-based decisions. And it also leads to setting and chasing the wrong goals. I've seen this many times. I've also seen it cost businesses money. One example that I'm going to talk about later on in this episode is a business owner who overpaid in taxes by tens of thousands of dollars as a result of basic financial reports. And I've also seen people incorrectly price their products, thinking fully that they had done a good job at pricing because of what their financial reports were reporting, when in fact, they didn't quite get it right and it cost them a lot of money. So you want to get this right. This is a foundational step that you want to get in place for your business. If you've downloaded the free Profitability Roadmap, you know that this is step number 2 on the roadmap. That's how important it is. That's how critical I think it is for business success, but it's not a difficult step to achieve. And that's the really exciting part. So I've said it a couple of times. What do I mean exactly when I say that you should have financial reports that serve you and your business? What I'm talking about is having financial reports that reflect how your business operates and shows the information that's important for you to make decisions. Think about it this way. A cottage food business will have a P&L statement that looks very different than a CPG brand, right? Cottage food businesses operate from home. That means they don't pay rent. They also have a cap on how much revenue they can achieve or, get to within a 12-month time frame in order to fall under the cottage food bill, at least here in California. A CPG brand can produce their product in-house, or they can work with a co-packer. They could sell regionally. They could sell nationally. They can make as much money as they want to in a year. Their P&L reports are going to look very different because their businesses are very different. Likewise, both of their P&Ls is going to look very different from a catering company P&L. Catering companies, especially full-service catering companies, have so much detail in their profit and loss statements. But there's also differences between companies that make and sell similar products. Let's talk about CPG brands again for a second. If you have one CPG brand that sells wholesale only, their report is going to look quite different than a CPG brand that sells online and wholesale. An online business structure means that you have packaging, right, and shipping costs that the wholesale company is not going to have. You might have online fees, right? And website fees that the wholesale business isn't going to have. And just those few little things alone are going to differentiate your financial reports from the other CPG brand. The point I'm trying to make here is that every business is unique and it has unique goals. And your financial reports can reflect that. And in fact, they should reflect that. Ensuring that your revenue, your cost of goods sold, and your operating costs include details pertinent to you and how your business operates will help you be financially successful. So, how do you know if you're working with basic reports, right? And if they need a revamp? Let's talk about the 3 signs and some examples for each. Sign number 1. If you sell via more than one sales channel and all of your revenue is lumped together in one single line item called sales, your financial reports are in need of a revamp. If you sell via multiple sales channels and your revenue is separated by sales channel on your P&L report, but it's not clear or the separation and the descriptions aren't meaningful to you, your financial reports are in need of a revamp. Let's dig a little deeper into that. So if you're working with a single line called sales, this is problematic for a few reasons. The first reason is that you can't see your revenue per channel, right? And when you can't see revenue per channel, you can't see which revenue stream is the strongest. You can't track seasonal, sales changes or trends for each sales channel, and you can't determine the profit margin per business line. And all of this is very valuable information that you can use for decision making. The second reason is that if you're selling wholesale and retail and all of your sales are lumped together, there is some concern about how your taxes, particularly your sales taxes, are being calculated. A few moments ago, I mentioned the business owner who grossly overpaid on their sales tax. That was because all of her sales were lumped into a single line. And as a result, she was paying sales tax on all of her sales, despite the fact that the vast majority of her business was to wholesale customers, which does not generate sales tax charges, right? So lucky for her, the IRS will issue a refund for her overpayments, but it would have been really nice to have that cash in the business. And thankfully, a new bookkeeper that she started working with identified that this was an issue. That's super important. If you're working with more than one sales channel, online, wholesale, farmers market, whatever they might be, make sure they're separated out on your reports. The second thing we talked about was maybe they're separated out on your reports, but the descriptions aren't clear. And I want to share some examples of what that has looked like for some clients. There's one P&L that's coming to mind where the revenue categories were sales and then retail sales. Not super clear. If someone just came and looked at that P&L, you wouldn't necessarily know, what falls into sales? What are those business channels? Are we sure that general sales and retail sales are being separated properly? It's not super clear, right? Another one I've seen is online sales and then other online sales. That might make sense to you as the business owner, right? Maybe online sales is your website and other online sales are other websites, but ask yourself, is that enough information for me as the business owner to really understand what's going on in each of my online, sales outlets? And is it clear to the bookkeeper what online sales fall into what category? So something to think about. Sign number 2, all of your COGS are lumped into a single cost category called costs of goods sold. Now, I know that there is not a single food business owner listening right now that has only one COG, right? But this is very common. So similar to not having your sales separated by channel, not having your major COGS categories tracked individually prevents you from seeing and tracking valuable information for controlling costs and maintaining your profit margins. Of particular importance is the ability to see your ingredient costs clearly month to month, as well as your packaging costs. I also want to point out here that the cost of goods sold section of the P&L for a full service catering company is critically important and should include detailed information about the various costs of goods sold that you have for your business. It's immensely helpful for you to see what the true gross profitability of your business is. And like I said, this is just an immensely important category for full service caterers. So if you run a catering company and you've got, 2-3 cost of goods sold, your reports need a revamp. Sign number 3, your operating expenses are a simple list of expenses in alphabetical order. So I want to clarify that your operating expenses will always be listed in alphabetical order. That's just how the reports are organized. But grouping similar information together and creating subcategories is going to provide you with much better information, a much better picture of your business, and for me, helps me make easier sense of the data that I'm looking at. So here's an example. Labor costs include wages, right? They might include salary and they might include hourly wages. But including things like payroll taxes, payroll fees, right? Some people include workers' compensation, tax payments. All of that information is important because all of that is the true cost of having employees. So having it all lumped together allows you to easily get your total costs for labor without having to do any additional calculations. You may have a business that is in a growth phase and utilizing several marketing strategies and tactics. As a result, you might track your marketing spend in detail so that you're Advertising and marketing category would have subcategories tracking things like Facebook advertisements, Google AdWords, etc., right? So that you can track your spend easily for each type of ad spend and use it to understand your performance. Okay? So those are examples of how you might get into detail in that operating expense category to have more helpful information and more insight into the spending of your business. So let's recap. The 3 signs again are: number 1, if you sell via more than one sales channel and all of your revenue is lumped together in a single line, your financial reports are in need of a revamp. Likewise, if your revenue is separated a little bit, but it's not quite clear or the descriptions aren't meaningful for you, you probably need to revamp your financials. Sign number 2, all of your COGS are lumped into a single cost category called cost of goods sold. And sign number 3, your operating expenses are a simple list of expenses in alphabetical order. Your P&L may reflect all 3 of these signs, or just one of these signs. Your P&L may not be described by any of these signs, but maybe you're thinking to yourself how you could better organize your data or add a bit more detail that would be helpful for you to see and track on a monthly basis. It's exciting stuff to think, I have detailed information that's important to me that I can't easily see month to month. I'd like to have that added to my financial reports. So if you've identified that you certainly need a revamp or that you want to do some tweaking to your financial reports that are not quite basic, but not quite designed just for you, you need to do the work to modify the information and how it's stored in your accounting software. Okay. So in other words, in order to get reports that look like you want them to look, you have to change how the information is input into your system. So here are the steps to take to revamp your financials and get the valuable reports you need. First, sit down with your P&L report and determine what information you should be seeing that you don't currently see, and what data, if any, should be grouped together to help you analyze your data better. Then, if you've got a bookkeeper, I highly, highly recommend setting up a meeting to first and foremost discuss your business, how you operate, where you sell, and what your goals are. If you haven't shared these details about your business with your bookkeeper, there is no way that they will understand the why behind the changes you want to make and how your data is recorded and how you want your reports to look. Having this conversation will also help them understand your business better so that they can become a partner to you. And this may be hard for some of you to believe, but many bookkeepers find real value and actually enjoy working with their clients. In a partnership, bookkeepers feel empowered to bring discrepancies, opportunities, or other findings to your attention, and the partnership can be extremely valuable to you. Once your bookkeeper fully understands your business, review the information with them that you'd like to see on your P&L report, and then any information that you'd like to group together. The changes that they make can take a month or so to fully be in effect. In my experience, bookkeepers make these types of changes at the beginning of a new month, and then the reports will become available at the end of that month. So be patient and give them time to do their work. Once you get the first new P&L report, for example, communicate with your bookkeeper about anything additional that needs to be changed, any modifications that they may have missed. And because it's so important, if you're not getting your completed financials by the 7th or 8th of each month, ask your bookkeeper if there's anything they need from you to make this happen, as it's critical for you to have timely reports. Remember, this is a partnership, so ensure that you're doing your part to provide the information and the details that your bookkeeper needs to do their work quickly. If you don't have a bookkeeper and you are doing your own bookkeeping, you can carefully implement the changes on your own, or you can call in some help and download the Financial Success Formula workshop where we cover this entire process. We also do this work inside the Financial Success Formula online program, where you have the added benefit of personal coaching. Building a financially sustainable and profitable business is a numbers game. When you understand yours, make key decisions based on them, and track your progress, reaching your goals will be a reality sooner than you can imagine. Remember, the free Profitability Roadmap is where you can find information on the 4 steps for building a solid financial foundation for your food business. We talked about step number 2 in this episode. And the free food business financial community, which is hosted on Mighty Networks, is open for you. So find the link to join in our show notes, or visit profitablefoodbusinesscommunity.mn.co. And we will be happy to support you and answer any questions you have about this process in that group. I hope to see you there, and I will talk to you all again very soon.